Hey everyone, happy Sunday. This is Taylor and we'll jump into the weekly watch list video for the week of June 27th. I'm going to try to keep the video under 30 minutes. No promises. We got a lot to cover here, guys, but if we look back at the notes that I shared in last weekend's video, the major note was if the bulls can't get the S&Ps back above 380, this market is in some trouble. And obviously I used a bit more colorful language, but sure enough, guys, the bulls went out there and did their job. And pretty much all that happened on Friday. We got the gap up, we got the move above 380, we even got a close there above that 21 EMA. Very good progress here from the bulls, and the Qs, definitely your leadership last week. Huge move on Friday, big old short squeeze into the weekend, fills the gap, and you got a close there above that daily 21 EMA. So definitely good progress on the bulls, and the question that we have to answer in this video is the bull market back? So, I'm going to cut right to the chase here, guys. I do think this week we're looking for a bit more upside. So I do got a few long positions to suggest. I'm looking to get long the S&Ps, the Qs, a couple different stocks here, but that's all really short term. So I think we got some more upside, but in terms of answering the question, is the bull market back? Is the bottom in? For now, I think hell no. So here's my perspective, guys. I can't think a bottom is in. I can't think the bull market is back pretty much until we cancel out this weekly squeeze. So you got the weekly squeeze here on the S&Ps, and this is going to be week number 3 of that weekly squeeze firing to the downside. So the significance here is typically when a squeeze fires, we tend to get 5 to 8 to maybe 10 bars of momentum. So in terms of a weekly squeeze, once that fires short, we're looking for maybe 5 to 8 plus weeks of momentum to the downside. So from my perspective, before I can say, okay, the bull market is back and we're not going to see any further downside, we basically have to cancel out that signal. The S&Ps are going to have to rally here to the point that they cancel out that weekly squeeze that's currently firing short. And to me, guys, that doesn't happen until we start to close back above that weekly 21 EMA. That's all the way up there at 420. So that's how I see things as far as a bigger picture perspective. I'm looking to get long. I'm looking for a bit more of a short squeeze. But in terms of answering the big question, is the bull market back? The weekly chart would suggest hell no. So pretty much, guys, for now, I'm looking at this as a short squeeze. I'm looking at this as an oversold bounce, a bear market rally, whatever you want to call it. But again, in terms of a focus on structure, we could rally all the way back up to that weekly 21. Doesn't really change the structure. So if you think of like the 2020, 2021 market, pretty much all the S&Ps and the QQQ did was pull back to that weekly 21 and then turn the corner and go on to make new highs. So when you have the bullish weekly structure, when your 21 EMA is trending to the upside, when you have the positively stacked EMAs, it's kind of tough to look at that pullback and say, yeah, the bull market is over. Till it proves otherwise, it's kind of just a pullback into support. So in a downtrend, when we're under the weekly 21, the good old weekly 21's pointing to the downside, we don't have positively stacked EMAs. With that overall bearish structure, a rally all the way up to the 320 level, it's kind of tough to look at that as anything more than an oversold bounce, a weekly reversion to the mean. So it's not to say the S&Ps are going to get to their weekly 21 or the QQQ, but I'm trying to give you a bigger picture perspective of what to expect in a bearish market. We're going to get these nasty flushes, then you're going to get these freaking crazy rallies. Right? And sometimes these rallies can last for 2 to 3 plus weeks. Those rallies do a great job of convincing you the bull market is back. So as always, guys, tune out the bullshit in the news, tune out the opinions, focus on the structure. We're looking for a bit more upside, but we're only looking at it as a bear market bounce unless we start to close back above that weekly 21 EMA. Now, obviously, I'm going to trade whatever the market has to offer. So we could gap down, 3 or 4% tomorrow, and that kind of, throws the idea of any further upside out the window. But in terms of things to at least take into consideration, this coming Thursday, the 30th, June 30th, it's a big expiration, guys. Thursday is going to be your quarterly expiration. So food for thought here. You've got a lot of open interest over here on the put side. Whoops. The 3,800 puts, the 3,900 puts, the 3,950 puts. You got open interest all the way up there to 4,000. So, again, just food for thought, things to take into consideration. A lot of times what the market likes to do, a couple of weeks out from these major expirations is get everybody in the market leaning heavily in one direction. In plain English, if you take the current example, what we might be seeing here is the market freaks everybody out, right? Gets everybody into those puts, gets everybody scared. Then you might get one of those instances where into quarterly expiration, you get a rally in the market that does a pretty good job of making sure the 3,800 puts, the 3,900 puts, the 3,950s, maybe even the 4,000 puts expire worthless. It's a good old-fashioned rope you in, sell you some puts, and then they kind of wipe the floor with you into expiration. So, again, food for thought, but we're deeply oversold. Even with yesterday's rally, or Friday's rally rather, from a weekly charts perspective, we're down here at -2 ATR. We're still pretty extended, guys. So, extended market, very much, and if you look at the put-call ratio, extended market, a couple of weeks ago you get folks really leaning short here. I think there's a potential in the quarterly expiration. We get a bit more upside. So, in terms of trying to get positioned for a push, maybe upwards of 400 on the S&Ps, here's a few things to look for. So I want to get long, but Friday's move was, Friday's move was pretty freaking crazy. So when you get a crazy rip like that, where basically you gap up and just continue to grind higher all day, it isn't necessarily sustainable. So if you look at the hourly chart here, we're trading about $10 above the hourly 21 EMA. We're a little bit overbought here on the lower time frames. So I want to get positioned long, but ideally early Monday afternoon, maybe Monday morning, I would like to see a little bit of a dip here. And I would be willing to buy that dip all the way down to that 21 EMA. I gave you guys a level of 380 last week. Told you if the S&Ps can get above 380, the bulls have some control here. Keep that level in mind this week. Under 380, then I think the bulls are kind of losing some control. So as far as looking to buy a dip, I am willing to buy a dip all the way down to just about 380. And looking for a push into higher prices at the Friday, I think something simple like a put credit spread on the dip might make a lot of sense. So for now, guys, that's a game plan here on the S&Ps. I can't look at this as the bottom is in and the bull market is back until we cancel out that weekly squeeze. However, we're oversold. We're heading into a huge expiration. Everyone and their mama seemingly is holding puts here. I do think we got a window of opportunity to trade the market maybe into 395, 400. So that's a game plan. Early tomorrow, we're looking for a dip, and we're willing to buy that dip all the way down to about 380. So that is how I'm seeing things on the S&Ps. And quite frankly, guys, for what it's worth, you might want to go with the QQQ here. Definitely your leader there on Friday, but the same rules apply. You got a lot of folks that are short. You might get the short squeeze here into the quarterly expiration, but I don't think you want to get all goofy on Monday morning and chase this thing. So for the Qs, I'd be willing to buy it all the way down to that hourly 21. So that's what I'm seeing for the indices. Now I'm going to show you guys a few of our open positions and cover a few setups and names like Zoom, Tesla, Roku, GameStop, and a few more. So we'll dive into the watch list portion of the video now. Actually, before we jump into the watch list, quick reminder here. For further confirmation that the bulls can push this market higher, we would ideally want to see the US dollar, the Dixie, $DXY, under that daily 21 EMA. The bulls took control last week. You've got a big shift of structure. In terms of lower time frames and your daily charts, the only missing piece of the puzzle here for a bit more upside would be the flush on the dollar. So put that on your watch list, set a few charter alerts. If you get the Dixie under 104, 103-ish, your S&Ps, your Qs, they should be able to keep it pumping further. Alright, so a few setups here for you guys. I know y'all like your setups. Before I show you a few, though, as far as the big three bars go, here's the improvement from last week. So heading into last week, we had the red big three bar, the sell signal, on a daily chart all the way down to the 15-minute. Huge improvement last week. Neutral big three bars on a 4-hour, 2-hour, 1-hour, 30-minute. So you cancel out all those lower time frame sell signals, and you've even got a green big three bar, the buy signal on the 15-minute chart. Very, very good progress. Kudos to the bulls. For the QQQ here, and again, I know I started the video off saying look to buy the dip in the S&Ps. I think you looked about a dip in the QQQ. I mean, if one of them works, they both work. You're not going to see the S&Ps fall apart and the Qs continue to rally. But the Qs, I think, a little bit of relative strength here. So as far as the big three bars go, if you all look over here in the top right-hand corner, you'll notice we don't have a single red big three bar in any time frame. So that push on Friday was so strong, it canceled out every active sell signal. And it brings in a little buy signal here with the green big three bar to the 15-minute chart. So these are signs that the bulls are trying to take a little bit of short-term control. And as always, guys, as goes the S&Ps and the Qs, goes the individual stocks. So for a few names here on the watch list, one name that we're going to focus on this week is the almighty Tesla. So for those of you in my mastery, the alert service, we jumped into some Tesla about 20 minutes before the close on Friday. So we sold a June 1st expiration, or July 1st expiration rather, 7.2715 put credit spread, sold that for just about $2 a credit. So for Tesla here, guys, we're looking for a push towards that daily 50 SMA, right around 790 to 800. In terms of the structure here, you have squeezes on the daily 4-hour, 15-minute, and 5-minute time frames, and you'll notice no red big three bars. And as a matter of fact, part of the reason that I like Tesla here is even as the S&Ps and the Qs were still getting spanked, right, good old-fashioned spanking, Tesla was one of the first names to get rid of all the red big three bars. So while the market remained bearish, Tesla went neutral. When something can go neutral and cancel out all the sell signals, typically all it needs is a bit of a market behind it to make a pretty good push. So no sell signals, neutral on the daily 4-hour, 2-hour, 1-hour, but we got a couple of green beans here. A couple of green big three bars on the 30-minute and the 15-minute chart. So we'll check those out. All right, 30-minute is fresh, so brand new signal. And the 15-minute chart here, looking pretty good. So, good structure, no sell signals, couple buy signals, and that close on Friday above that daily 21 does open the door for a bit more upside. So, we're selling that put credit spread based on that close above the 21, but also really looking for that 15-minute squeeze to carry this into higher prices early next week. That 15-minute squeeze fires, granted it's a smaller time frame, but if you get a strong market, that 15-minute squeeze firing along could trigger the push towards that daily 50. So for Tesla here, guys, we got the put credit spread, and if you look at an hourly chart here, again, you got to keep in mind, that push on Friday was, really impressive. So I do think you want to also be ready for a bit of a gap down tomorrow. Right? It makes sense, kind of shake out some of the weak hands. So as far as Tesla goes, I'd be willing to buy that all the way down to about 700. So Tesla looks pretty good, guys. Now we're going to jump into the next name here on the watch list, which is Zoom. Okay, Zoom. So for those of you in the options room, we actually had a pretty nice trade last week on Zoom. So we sold a put credit spread, I think, on Tuesday, and we bought that bad boy back on Friday for pretty decent profits, nothing crazy. But for Zoom here, guys, I think if you can get a dip, we're looking for a push upwards of 130, 135. So the initial target for the trade that we took last week was a push from that daily 21 up towards 2 ATR around 125. We didn't quite get 125, but going into the weekend, you take a little bit of profit off the table, never a bad idea. So taking profits on Friday, but we are looking for a pullback to jump back in and reload. So as far as Zoom goes here, guys, compared to the S&Ps and the Qs, and really compared to a lot of names in the market, this fixed its daily structure with a move back above that 21, and it canceled out the bearish big three bars way before the market ever did. The market basically starts to clean up on Friday. Zoom starts to clean up back here in late May, like May 26. So a little bit like Tesla, but probably a better example. Go from bearish to neutral, shift your structure, then if you can get a market behind you, you might have something to work with. And I think also interesting, if you guys look at the ARK ETF, Zoom is one of the top holdings there in the ARK ETF, and Again, this is all short-term thinking. I'm not trying to buy anything for 2, 3, 4 months here. But Zoom being one of ARK's biggest holdings, if you check out ARK here, you've basically got the same dynamic we're seeing in the S&Ps and the Qs. Actually, compared to the S&Ps and the Qs, ARK kind of cleans up a little bit quicker here. You're back above that daily 21. You've got the shift of momentum here on the histogram. But more importantly to me with the new indicator here, I don't have any red big 3 bars. Right? We had them for weeks on end, but on Thursday it gets canceled out. Daily chart goes neutral, 4-hour, 2-hour, 1-hour chart goes neutral, and now you're starting to see a flip to bullish on your 30-minute and the 15 with the green big 3 bars. So I think the S&Ps, the Qs, and ARK trying to show very short-term signs of bottoming. That's going to be good for a lot of the quote-unquote junk stocks, the Rokus, the Zooms, the Teladocs, things of that nature. So for Zoom here, guys, if we can get it on a pullback, we're looking for another entry. Squeezes on the weekly, 3-day, and the daily chart. So if you check out the weekly here, certainly not an uptrend. But as the momentum starts to shift, it's got some potential. And then as far as the big 3 bars go, we have the buy signal on the 2-hour, 1-hour, 30-minute, 15-minute chart. So the 2 hours going bullish. The 1-hour chart is going bullish. And there was our entry on the 22nd. Market opens up. Little bit of a dip there in Zoom. But you only dip to your hourly 21. You dipped to your hourly 21 and you had the green big 3 bar. Easy decision to jump in. So for Zoom, again, guys, I don't think you got to chase it up here. I'm not going to chase it up here. But if we do get that little bit of a reset in the market, right, a little bit of a dip, we're watching Zoom here, looking to jump back in and reload for a push towards 130, 135. All right, guys, next up is Google. And, before we cover Google, just remember, it all comes down to the S&Ps and the QQQ. So if the QQQ and the S&Ps roll over on Monday, Google's going to roll over, Zoom's going to roll over, Tesla's going to roll over. Trying to trade these individual stocks to the upside, it's all contingent on the S&Ps and the Qs pushing a little bit higher in the quarterly expiration. But for Google here, you got some big-time relative strength. 5% move to the upside on Friday. Again, if you look at an hourly chart, like everything else out there, it's a little bit overbought. But I think any dip here, guys, you might look for a shot for a pushback towards 2,400. Typically in a daily squeeze, we're going to look for a push towards 2 ATR. 2,400's right up there. Big, sexy, round number. Again, all comes down to the S&Ps and the Qs. But if you get that short squeeze in the quarterly expiration, any dip here on Google, you might look for a cheap trade to for a push towards 2,400. So that is something we're certainly interested in. And then next up here, guys, is Roku. So another one of those ARK names, and there's your shift of momentum. You cancel out the bearish big 3 bars on the daily chart, as well as every other time frame, and your 15-minute and your 30-minute chart have gone bullish here. So if that 30-minute chart, for example, has the green big 3 bar, I'm either looking for a 30-minute squeeze. So obviously I missed a nice trade last week, or I'm looking for a dip to that 30-minute 21. So if the S&Ps can give us a little baby dip here, I'm trying to think, what do we do here for a trade? Couple different ways to play this. The other thing to remember is a lot of times, the market likes to pin things into these big expirations. So you're kind of looking at like $100 there as one potential spot they could pin it. So I think you keep it simple. Maybe a put credit spread. Again, we'll have to see where it opens. I'm just trying to give you guys ideas for now. But there's another good example of shift momentum, shift structure, shift the big 3 signals, looking for a bit more upside. So there's a few picks for you guys. Tesla, personally, it's kind of the number 1 pick here. But we do like Zoom, we do like Roku, we do like Google, and then potentially, guys, a bit of a wild card here is GameStop. So in the mastery, we still have our call debit spread here. 150 is going to be a tough level. Now, when the event 150 could break, you probably see this back towards 180, 190, 200. It can happen pretty damn quick. But your first attempt gets stuffed, your second attempt gets stuffed, and if you want to call Friday the third attempt, that gets stuffed as well. But the key here, guys, is you can rally into resistance. It's one thing to fail, but it's another thing to fail and then totally break structure. So notice here, granted, it is having a tough time getting through 150, but every one of these pullbacks does find support at that daily 21 EMA. So pretty nasty flush on Friday. Of course, frustrating for anything you're long to be going against you on a day where the S&Ps and the Qs are up 3+%. But going back to what I said earlier, you focus on structure. For now, this does hold structure inside the daily squeeze. So a couple closes under that daily 21. I'm probably going to be a bit more inclined to toss the trade aside. But if we can hold structure here, we will give it a fighting chance for a push towards 150. So we got our GameStop. We still got a few shorts here in Rivian, and I tell you what, considering the rally in the market on Friday, you really can't complain if one of your short positions is basically flat on the day. So this is the only thing we're short right now. And granted, if the S&Ps and the Qs keep on pushing, I kind of expect Rivian to make a bit of a move to the upside here. If it doesn't, no complaints out of me. So we're still keeping that short in our back pocket. We got the GameStop, we got the Tesla, and we are still holding a few iron condors here on the S&Ps. So if you guys check out the channel here, a couple of weeks ago I gave you a video breaking down a potential iron condor on the SPX. Based on Friday's close, if we can push a little bit higher here early this week, that iron condor should pretty much expire at max profit. So if you took that trade I suggested, should put a good $600 or $700 in your pocket. And what I'll do for you guys here that subscribe, we will look for another iron condor in a couple of days here for July expiration. So I'll give you guys another one of those ideas. But that is what I got for y'all on this beautiful Sunday afternoon. Again, I hope you had a good weekend. I certainly did. Chandler finally came home to visit. So for those of y'all that don't know, Chandler and I were born and raised in Massachusetts, but last year him and his girlfriend, they moved on out there to Dallas, Texas. So anytime he comes home, it's a good time. But my friends, always good to chat, and I hope you found the video helpful. So as a bit of a recap here, no, the bull market is not back, from my perspective, until we're closing back above that weekly 21. You have to cancel out this weekly squeeze. It's currently firing short. These bounces, even if we bounce all the way back to 415, 420, does not change that bearish structure. So what I think we're seeing for now is just a market where everyone got a little bit too short, and into a big expiration here, the market might be trying to do what it does best and make sure all those options expire worthless. Trying to hand out as much pain as possible. So we're looking for short-term upside. I'm not trying to get long the S&Ps for September, October, November expiration. It's way too early for that. We're looking for upwards of 400 this week on the S&Ps. For the QQQ, we are looking for upwards of, call it 305-ish. But before we jump into the upside there, because of that strength on Friday, we wouldn't mind seeing a little bit of a dip. Hope you guys find this helpful. If you haven't already, go on ahead and subscribe. Let me know down in the comments how you did last week, and if you think there's anything I should be focusing on as far as setups go heading into this week, please let me know down there in the comments. But until tomorrow, guys, hope you enjoy the rest of your Sunday. I will see you bright and early at 8:45 a.m. Eastern here on the channel for pre-market prep, and I'll talk to you all then.